Hello students, in the previous class we are discussing regarding preparation of profit and loss account and balance sheet in a vertical format as per Companies Act of 2013. So in this class also we are going to discuss regarding profit and loss account, preparation of profit and loss account and balance sheet of joint stock company. Which one more to the problem? From the following trial balance of the additional information of Excellent Limited, prepare profit and loss account and balance sheet as on 31st March 2015 on a vertical form. We have that premises of 30 lakh 72,000, plant 33 lakh, inventories that is opening stock 7 lakh 50,000, trade receivable 8 lakh 70,000, goodwill 2 lakh 50,000, bank 4 lakh 7,000. All in arrears is 75,000, interim dividend paid 6 lakh, purchases 18 lakh 50,000, share issue expenses 50,000, wages 7 lakh 71,000, general expenses 69,000, salary 2 lakh 3,000, bad debts 21,000, debenture interest paid is 1 lakh, interest paid is 1 lakh 80,000, equity capital 40 lakh, 12% debenture is 30 lakh, profit and loss account 2 lakh 63,000, bills payable 3 lakh 70,000, creditors 4 lakh, general reserves 2 lakh 50,000, sales of rupees 41 lakh 50,000, and bad debts of rupees 35,000. Information: inventories, that is closing stock 9 lakh 50,000. Depreciate the plant by 10%. You have to provide depreciation of plant by 10%. Write off 5,000 from share issue expenses. Share issue expenses ಅಲ್ಲಿ 5,000 rupees ಲೆಸ್ ಮಾಡಬೇಕು. ಹಾಫ್ ಇಯರ್ ಡಿಬೆಂಚರ್ ಇಂಟ್ರೆಸ್ಟ್ ಡ್ಯೂ, ಹಾಫ್ ಇಯರ್ ಇಂಟ್ರೆಸ್ಟ್ ಡಿಬೆಂಚರ್ ಇಂಟ್ರೆಸ್ಟ್ ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು. ಕ್ರಿಯೇಟ್ 5% provision on trade receivable for doubtful debts. That reserve for doubtful debts is 5% on trade receivable. Provide for income tax at 35%. So income tax, the 35% should be calculated on profit. Transfer general reserve at 5%. So general reserve ಗೆ 5% transfer ಮಾಡಿ ಅಂತ ಹೇಳ್ತಾರೆ profit ನ. Provide for corporate dividend tax rupees 97,335. Corporate dividend tax of rupees 97,335. No final dividend is declared by the company. Company ಯಾವ್ದಾರ final dividend ನ declare ಮಾಡಿಲ್ಲ ಅಂತ ಹೇಳ್ತಾರೆ. First we have to prepare profit and loss account. Before that we have to prepare notes annexure to profit and loss account. We have that note number, particulars, amount in rupees. 22, revenue from operations, that is under that sale of goods of rupees 41 lakh 50,000. Note number 23, other income nil. And note number 24, cost of material consumed, that is also nil. Note number 25, purchases 18 lakh 50,000. Here note number 26, changes in inventory, that is the difference between opening stock and closing stock. Opening stock rupees 7 lakh 50,000 and closing stock 9 lakh 50,000. The difference is 2 lakh. ಇಲ್ಲಿ ಮೈನಸ್ ವ್ಯಾಲ್ಯೂ ಇರೋದ್ರಿಂದ ಡಿಫರೆನ್ಸ್ ಬ್ರಾಕೆಟ್ ಅಲ್ಲಿ ಪ್ರೆಸೆಂಟ್ ಮಾಡಿದ್ವಿ. ಬ್ರಾಕೆಟ್ ಅಲ್ಲಿ ಪ್ರೆಸೆಂಟ್ ಮಾಡಬೇಕು. And note number 27, employee benefit expenses under salary 2 lakh 3,000, wages 7 lakh 71,000, total 9 lakh 74,000. Note number 28, finance cost, another debenture interest paid 1 lakh 80,000, and outstanding interest, that is 1 lakh 80,000, total is 3 lakh 60,000. Note number 29, depreciation and amortization expenses, that is 20% depreciation on plant, ಅದು ಬಂದಾಗ 3 lakh 30,000, and share issue expenses write off, that is 5,000. ಅವರೇ ರೈಟ್ ಆಫ್ ಮಾಡಿ ಅಂತ ಹೇಳಿದ್ದಾರೆ. 5,000 ಅದು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿದ್ರೆ ಟೋಟಲ್ 3,35,000 ಆಯಿತು. And note number 30, other expenses, under that general expenses of 69,000 and bad debts. So already ಇರುವಂತ bad debts 21,000. For that add new RBD, so 5% create ಮಾಡಿರಲಿಲ್ಲ, ಅದಕ್ಕೆ 43,500 ಬರುತ್ತೆ. ಟೋಟಲ್ ಮಾಡಿದ್ರೆ 54,500. From that less old RBD reserve for bad debts ಏನಿರುತ್ತೆ ಲೆಸ್ ಮಾಡಬೇಕು. 30,000 ಲೆಸ್ ಮಾಡಿದ್ರೆ remaining balance 29,500. The total is other expenses 98,500. Here whatever the annexures we are created here, notes annexure to balance sheet should be presented in notes annexure to profit and loss account should be presented in profit and loss account statement. Profit and loss statement for the year ended 31st March 2015. Particulars notes as at 31st March 2015. Revenue from operation, note number 22, 41 lakh 50,000, and other income, note number 23, nil. Total is 41 lakh 50,000. Record the total income. That expenses, cost of material consumed, note number 24, nil. The purchase of stock in trade, note number 25, 18 lakh 50,000. Changes in inventory, note number 26. There's a minus value, that is 2 lakh. Employee benefit expenses, note number 27, 9 lakh 74,000. And employee benefit expenses, note number 27, that is 9 lakh 74,000. And finance cost, note number 28, 3 lakh 60,000. Depreciation and amortization expenses, that is note number 29, 3 lakh 35,000. Other expenses, note number 30, 98,500. Here that ಒಂದು ಮೈನಸ್ ವ್ಯಾಲ್ಯೂ ಇದೆ, ರಿಮೈನಿಂಗ್ ಪ್ಲಸ್ ವ್ಯಾಲ್ಯೂಸ್ ಇದೆ. ಫಸ್ಟ್ ಪ್ಲಸ್ ವ್ಯಾಲ್ಯೂಸ್ನೆಲ್ಲ ಆಡ್ ಮಾಡ್ಕೊಂಡು ಅದರಿಂದ ಮೈನಸ್ ವ್ಯಾಲ್ಯೂನ ಲೆಸ್ ಮಾಡಿದ್ರೆ ರಿಮೈನಿಂಗ್ ಬ್ಯಾಲೆನ್ಸ್ ಇಸ್ 34,17,500. It is called total expenses. Now you have to calculate profit before exceptional item and tax. So ಇದನ್ನ ಹೇಗೆ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ತೀವಿ ಅಂದ್ರೆ ಟೋಟಲ್ ರೆವಿನ್ಯೂ, ದಟ್ ಇಸ್ ಟೋಟಲ್ ಇನ್ಕಮ್ ಏನಿದೆ ಅದರಿಂದ ಟೋಟಲ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ನ ಲೆಸ್ ಮಾಡಬೇಕು. ಟೋಟಲ್ ಇನ್ಕಮ್ ಇಸ್ 41,50,000, ಟೋಟಲ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ 34,17,500. Remaining balance is 7,32,500. That is called profit before exceptional item and tax. From that less exceptional item nil, from nil, that is 7,32,500. It's called as profit before tax. From that less tax expenses 35% on 7,32,500. That is 2,56,375. So the tax expenses should be less from the profit, 7,32,500 from less. That is 4,76,125 will be the remaining balance. That is called profit transfer to balance sheet. Now you have gone to that note annexure to balance sheet. The first one is number 1, share capital, paid up capital 40 lakh and less call scenario 75,000, remaining balance 39,75,000. The second one is note number 2, reserves and surplus. Here the general reserves 2,50,000 is already given balance. Add 5% transfer, 5% on 4,76,125. That is current year profit. So 5% on 4,76,125 is 23,806. The total of general reserve is 2,73,806. And coming to the profit and loss account current year, 4,76,125, and profit and loss account of previous year 2,63,000. The total is 7,39,125. From that less interim dividend 6 lakh. The remaining balance is 1,39,125. But of that less corporate dividend tax of rupees 97,335. Remaining balance is 41,970. From that less transfer to reserve, that is this amount 23,806. Less it, the remaining balance is 17,984. The total is 2,91,970 rupees. Note number 3, long-term borrowings, 12% mortgage debenture 30 lakh and add interest outstanding of rupees 1,80,000, 31,80,000. Note number 4, deferred tax liability nil. Note number 5, other long-term liability nil. Note number 6, long-term provision nil. And 7, short-term borrowings nil. Note number 8, trade payables, credit as 4 lakh, bills payable 3,70,000, total 7 lakh. 9, other current liability nil. 11, short-term provision for taxation 2,56,375 and corporate tax of rupees 97,335. Total is 3,53,710. Fixed assets under that plan 33 lakh. From that less 10% depreciation 3,30,000. Remaining balance is 29,70,000. In premises 3,72,000 and the goodwill 2,50,000. Total is 62,92,000. 12, non-current investments nil. Number 13, deferred tax assets nil. 14, long-term loans and advances nil. And 15, other non-current assets nil. 16, current investments nil. 17, inventory, that closing stock rupees 9,50,000. 18, trade receivable, out of the debtors 8,70,000. From that less 5% provision for doubtful debts, that is 43,500. Remaining balance is 8,26,500. 19, cash and cash equivalent 4,07,000. 20, short-term loans and advances nil. And 21, other current assets, that share issue expenses 50,000 plus other in the less return of 5,000. Remaining balance is 45,000. So whatever the things which are calculated here, notes and extra to balance sheet should be presented here in the face of the balance sheet. Of Excel Limited, balance sheet as of 31st/3/2015. Particulars, note number, figures for the current reporting period. Under that particulars, first one is equity and liability. Under that shareholders fund. Under that A, share capital. Note number 1, 39,25,000 and B, reserves and surplus. So that is note number 2. I'll calculate number 2,91,790. The C, money received against share warrant. That the information will nil. And the second one is non-current liability. That long-term borrowings, note number 3, 31,80,000. B, deferred tax liability nil. C, other long-term liability, note number 5 nil. Long-term provision 6, note number 6 nil. And the current liabilities under the short-term borrowings, note number 7, that is also nil. And B, trade payable, that calculated in note number 8, 7,70,000. And C, other current liability, that calculated in note number 9 nil. And D, short-term provision, calculated in note number 10, that is 3,53,710. The total of, that is from note number 1 to 10, that is the total of liability, the amounted to rupees 85,20,500. Coming to the second part in balance sheet, that is assets, that non-current assets. That A fixed assets, fixed assets. Note number 11 calculate ಮಾಡಿದ್ವಿ ನಾವು 62 lakh 92,000. B non-current investments. Note number 12 nil. C deferred tax assets. Note number 13 nil. D long-term loans and advances. Note number 14 nil. E other non-current assets. Note number 15 nil. Second one is current assets, and that current investment. Note number 16 nil. B inventories. Note number 17 9,50,000. Trade receivable, note number 18 ಅಲ್ಲಿ calculate ಮಾಡಿದ್ವಿ 8,26,500. And D cash and cash equivalent, note number 19 4,07,000. And short term loans and advances, note number 20, that is also nil. And the last one is fifth, other current assets, that we calculated in note number 21, the amount to rupees 45,000. The total of that is 11 to 21, note number 11 to 21 is 85,20,500. That is called as total of assets. Like that, we should prepare the profit and loss account and balance sheet in a vertical format as per Companies Act of 2013. So thank you for watching this video. Thank you.